Hey guys, so welcome on. Welcome, guys. Welcome, everybody. It's been a crazy one today through the markets. We've seen a massive crash in the price at the moment. Absolutely crazy. And I know some of you are wondering as if this is the end again and that things are going to go wrong. But I can guarantee you that by the time you finish listening to this, you're going to be a lot more sure as to what the price is trying to do. So before I continue, I don't want anybody to be afraid. Remember, guys, in these markets, don't operate from fear. Otherwise, you're never going to make money, all right, from trading. And this is the key right now. So before I continue, I'm going to give you guys a time to jump on. Everybody get yourselves in. Get yourselves in. Get yourselves in. Welcome. If you guys are jumping in from wherever you are, from everywhere around the world, get yourselves in. Get yourselves in. Get yourselves in. I'm going to start. I'm going to give you guys a few minutes to get on. Make sure that everybody's in. All right. If you want to get into this, definitely get yourself in. All right. Get yourselves in. It's very interesting to see what we have with the market. Again, I don't want anybody to be afraid. Just let us look at this carefully to see what's going on. All right. Get yourselves in. Now, there's two sides to the story here. I really want you to understand something that's going on. It's very interesting to see what the markets have done. Bitcoin is dropping like an absolute rock. And at the same time, we've had fundamental news. So today, guys, we have fundamental technical divergence. Now, what is that? Now, we've just had very, very positive news on BTC. So if you guys haven't seen the news already, all right, with El Salvador, I'm going to show you now what's happened. All right, so if we go right here, all right, and this is BBC News, by the way, guys, BBC News, all right, has said this. So if I switch over quickly right here, let's look at this. El Salvador, okay, has just announced, now this is from 8 hours ago, guys, on BBC News. El Salvador has just accepted Bitcoin and is finalized as a legal tender in their country. All right. Now, El Salvador has become the first country to accept. Funny enough, the El Salvador is called the savior of the economic crisis of cash and money as we know it. Is the first country to accept Bitcoin as legal tender in a move to have that the nation has got. And the world is debating the opportunities and dangers of cryptocurrency. Now, from today, businesses will be obliged, where possible, to accept controversial digital coins as payment. Now, millions of people are expected to download the government's new digital wallet app, which gives away $30 or £22 in Bitcoin to every citizen. Bitcoin fans around the world have been buying $30 worth of digital coins to show a support to this amazing situation. Now, this guy who is 26, El Salvadorian taxi driver, Daniel Hercules, is excited to move, but he's worried about how stable his earnings will be. I've accepted Bitcoin for 2 months since I knew this was coming. I just had someone pay me $40 in the fare to the airport, but it's rare. Only 10% of customers prefer to pay with Bitcoin. Daniel says that the cost of converting Bitcoin into local currency, the US dollar, is as high as 10%. So he's using the money like a savings account, which is amazing. He hopes to grow his wallet to around 1,000 in Bitcoin, but is scared about the currency crashing. It's one of those things that worry me the most. Losing money from the long days of work would not be okay. Now, Bitcoin fluctuations here, this is the main. So as you can see here, most of the uncertainty and the fear is around the stability in the price. But isn't it very interesting that this day that El Salvador announces the situation here with Bitcoin becoming legal tender, at this same time, we've had a massive market crash. Now, this market crash, I called it yesterday and I told you the price is going to go short. And the reason is very simple. So if I go back here to the weekly, now these lines here are not support and resistance levels. These are algorithmic levels. They're slightly different, hugely different from support and resistance. But what I'm going to do here, just for you guys to see what's going on, I'm going to put this right here for you guys to see. So if we start from the weekly structure here, I could have told you this, and I've said it in many videos, even all the way back to June, that when Bitcoin gets to this price level here, this is a very important algorithmic level on the market order book. I'm not talking about support and resistance. I'm talking about algorithmic levels. Now, this level right here, if you're just jumping in, please tell a friend to tell a friend, get yourself in. But this algorithmic level right here on the price, okay, was always going to produce a short. The timing is absolutely immaculate. Now, there's a few places the price needs to get to. One of them it's already crossed, which was at this price point. Now, I'm going to use a line to show you. So 45. And the other is right here. Now, the price hasn't actually got to 42, but it's very close. So we should see the price get to 42 in a moment. Now, I've always told you this, guys, and I was telling you with much concern, but I think because the market is very bullish, maybe some of you were thinking I'm just hoping for cheaper prices. But there is an issue with the price action of Bitcoin as a technical trader. As I told you, forget the fundamentals. It's funny, I just talked about fundamentals yesterday. If you haven't watched, this is part 5, by the way, of how not to fail trading crypto. All right. And in this episode here that we did yesterday, I have the notes right here somewhere. I believe that I left them on. All right. So this is part 2. And I believe I have part 3 somewhere here. This is part 1. See if I can pull this up. All right. So I can close that because that wasn't there. I'm going to close all of these for you guys so that you don't have to see this because there's a lot of writing. All right. So let's see here. All right. I'll pull it up. Here we go. So this is where we talked about the trap on the bulls. Now look at where the price has even got to on Ethereum. Look at where the body of the candle is. I told you the price is going to have to go here. There was no way the price was not going to go here, technically speaking, because this is the market order book. I'm so glad that you guys are seeing this. And even if nobody's watched this video, but in the future, you guys, you'll be able to see that when Money Mike says something about the markets, he's not just talking for talking's sake. You can see that even though we should be going higher, there's an inefficiency here and back down to here that the price didn't fill out. And they've taken the opportunity with this short to do it. All right, now here's the crypto litmus test we're talking about. So as you see my markings here, guys, these markings were from yesterday. I told you the price is going to get here into this order book and it's going to short because this is a very strong area of supply. And we've seen exactly that. So when I say something, guys, I hope you trust me from now on. Now, just as I've said this, Bitcoin is in danger of going back to 29. And the reason is because there's a liquidity pool. This pool of liquidity on the market order book, in order for Bitcoin to rise, that liquidity pool would have to be taken for sure. So Bitcoin has to get back to 28 at this price point right here. We haven't had that just yet. And Bitcoin is definitely in danger of doing that now. This move for Bitcoin to become legal tender, yeah, the way that the price is shorting at the moment, central banks do not want Bitcoin to become legal tender because if the whole world goes to Bitcoin, then the currency system that central banks and the central banks themselves will no longer have power over the people. So if this is going to be the trigger that causes Bitcoin to go short, because trust me, you don't think that central banks and institutions are watching closely to see what happens? They want Bitcoin to crash. They don't want Bitcoin to make it because what it represents as an infrastructure for economic freedom, they do not want to have it. They want to keep things centralized instead of decentralized. So I'm not surprised if Bitcoin continues to short, guys, because this is a very, very serious phase of price that we've got into. And not just a serious phase of price, we've come into a very serious fundamental phase in price. For El Salvador to take this movement is a very straightforward, is an offensive weapon or an offense against every central bank in the world. Remember, Bitcoin, if you're not too sure about why Bitcoin is if you've just jumped into part 5, you haven't followed me for a while. Bitcoin, all right, has what makes it very stable as in terms of currency, why is BTC a good replacement for currency? And I'm going to put fiat currency to make sure it's clear. Fiat. Why is it? The reason why, number one, most important thing here is that there's a limited supply, okay? Limited supply, which equals to having scarcity, all right? Specifically, the supply of Bitcoin is 21 million, all right? And I am still teaching how not to fail with trading. And if you follow me, you see what I'm talking about, all right? It has a limited supply. That's the number one thing. It has a known supply, number two, all right? Now, versus currency, fiat, which the supply is virtually unlimited, okay? As I always say, as many trees as exist in the world or in a country of a central bank, that's how much money can be printed. Because in essence, they can print as much money and create money out of thin air as many times as they want to. All right? So virtually unlimited. All right? So this makes central banks very afraid. Because what does this mean? It means that the value of fiat currency, because more currency is printed every single year almost, the value of cryptocurrency in terms of fiat currency is always on its way down. With Bitcoin, it's what we call a deflationary asset, which means over time, it gains value instead of loses value. And when it gains value almost irreversibly, okay? Because of the supply control. That's the key here. The reason why central banks do not like Bitcoin and especially Bitcoin and other cryptocurrency is because they have control of the printing room. All right. Imagine if you had the printer that controls Bitcoin. Every time you want to print out more Bitcoin, you could just say, okay, let me print it. But the blockchain, how Satoshi Nakamoto made it, or they made it, whoever she is, all right, have designed it in such a way where there will only ever be 21 million Bitcoin, which means there's a limited supply, which is known. All right. And because nobody can create any new Bitcoin, okay, and any destroyed Bitcoin can't be regenerated, it puts a very high amount of scarcity on this asset, which means over time, the value will go up. The more money goes into the system, the higher the value will be over time. Whereas with fiat currency, if there's a shortage of currency, they can just print more. If there's a shortage of Bitcoin, there's nothing you can do. It's going to cost more. So therefore, Bitcoin drives what we call true supply and demand. Because if there's a scarcity of Bitcoin and you need Bitcoin to do something, all right, it's going to cost you more to get it because people will raise their prices, because if there's a higher demand, the price is higher. If there's a lower demand, the price is lower. So this movement we just seen right here was always going to happen. I told you that fundamentals is just the timing for these events. Now with crypto, it's not the same as stocks, okay? Crypto is a full-on offensive against central banks, a full-on one, which means that central banks are going to be fighting Bitcoin. They're going to be fighting everything, especially Bitcoin, for it to not see the light of day. Now, I'm telling you that I don't believe that Bitcoin is done crashing. The reason why I say that is because there's gaps of liquidity that need to be filled out on Bitcoin back to 9,635. And I do believe the price will still fill those out. I wouldn't be surprised if this happens right now. So what we need to be very careful of, guys, is not to be too fast to go and put some buys on. Now, I've already given you guys the daily markers as to what to look for here. Now, on the daily structure of price, this area right here is the most important piece of information we need. Now, I'm going to mark it out for you guys, and I'm teaching you now part 5 of supply and demand. Now, this supply zone here, all right, we need to look at the history of it to understand what was going on here. But this supply zone specifically here is responsible for or instrumental in the price going short from this day right here, so June 18th, all the way until July 20th, when everything began to reverse. Now, we had the first break above this zone where the body of the candle closed above supply, okay, in August, on the 9th of August, all right? On the 9th of August, we had a body close, or that day, by the end of the day, we had a close above this zone, and then we had the return. We had one, and then we had a second, which we've discussed. Now, this return to the other side is a confirmation that the bullish side of the market, or the demand side of liquidity, is stronger than the supply side, okay? Now, when the price did this movement, we had the long take place from here, Now look at what the price has done. Notice that the price has come all the way back down here into the lowest point. The wick of the candle at the moment has closed beneath here. So what should we be aware of? What is the danger here that we should be watching out for? Now, the major danger here is that if the body of this candle, of this daily candle even, or another day closes beneath this area, we're going to have a reoptimization of supply. Or in other words, a reuse of supply for its original use. But then that will cause the price to trend lower. Now, there are many inefficiencies on the market order book on the way up. And I'm going to be very clearly watching to see what the price does on the way back down. So for me, when we watch the price action and what we see moving forward, it's very clear that we need to be careful of this area right here. If we get the body close as a technical trader, the price is going to get back to 29 and down to 28, which is where I believe at least the price should go. So if you have diamond hands, keep holding, because over time, and I believe Bitcoin will do well if the infrastructure stays right and everything of that sort. But I would say this, guys, I'm keeping my eyes very carefully fixed on what the price is going to do. It's going to be very interesting to see. Now, if you look at my markings for Ripple, same thing, guys. I called it yesterday already. I told all the students about this short, and you can see what the market has done. Do you see these two lows that I have marked out here? The market has run straight through it. So in crashes like these, the market algorithm is going to take advantage of pools of liquidity, and Ripple has some all the way down to 33 cents. Now, I'm not saying in this market right now is going to happen, but there is the potential for it. All right. Look at what we've seen with Ethereum. Ethereum has spiked all the way back down to where we said, guys, 3K. So if Ethereum's done the target. Now look at the markings I had. The price has done exactly what we were saying. So this is why I said you have to be very wise when you're observing the price. If you're a technical trader, you have an amazing advantage against institutional trade, not institutional, against fundamental traders only. All right. When you're an investor, if you're an investor without learning any, now the typical investor doesn't have any technical analysis skills. They just look at a project and they hear that they like it. They go on YouTube, listen to someone that says it's good, and they go and buy it. That's not really investing. That's just taking a guess. For me, a true investor is somebody who trades in slow motion. In other words, you're an investor because you put money into a system looking for a return, but you don't only just look at the fundamentals. You take some time to look at the technicals, because technicals tell you a lot more than what people will lead you to believe. If you want to know where money is in the market, which is what every investor needs to know, you're not going to look at a project, you're going to look at the order books. And if you can't read the order books, then you're not really investing. You're just taking a lucky guess. All right. So I want you guys to keep your eyes very clearly focused on this area right here. And hopefully by the time I'm done, you guys will be able to grab a very powerful lesson. All right. Now we had a range of accumulation here. And once the range of accumulation happened, I knew what was going to happen here. I have my markings here and we see what the price has done. Now, I'm glad I missed the trade, but if we are taking this trade, I gave a shout to my students for this trade today, but it took off before we had a chance to even do anything. It's done £500 already, and it hit both targets in so quickly, which is amazing to see. But what a trade it was. All right. Now keep your eyes peeled, guys, on what's going on in the markets, and we're going to continue. Now, I believe Ripple needs to get back to 84 cents because we have inefficiencies all along here. We've just had the first. If the price pulls back and gives us another entry, then we should be looking for a short. Now, why did I say Ripple will go short here? Remember, guys, this area of demand has become supply. We've had a return in here, so there's enough liquidity to push the price short. So I tried to explain this to you. Now we've had this spike in here. This is either a cheaper discount or a rebuy. So now you have to keep your eyes very clearly peeled on exactly what's going on, because we're not completely done just yet. We're not safe yet, but we really need to watch what happens on this day. Now, Cardano, I told you guys, if I go right now to my trading view, it was just about the time. So some of you maybe thought that I missed what I was saying with the trades and it's not going to happen. But technicals never lie, guys. Technicals never ever lie. So if I go to trading view right now and I show you my ADA, I'm sure if you see the markings, then you'll be able to realize what's going on here with the price. So let's look at ADA here. All right. I'm going to pull up my markings. I think I used I'll probably use Binance to do this. So let me go to Binance. All right, here we go, guys. I'm switching over. All right, so let's look at this now. So look, you see my markings here, guys? So if we look at the price action very carefully, from the bullish side here, let's use a cross here. The price was pushing very strongly long, and we saw that the trend started to get a lot more weaker. All right, and then all of a sudden, when the price got to $3, now what did I say last time, guys? $3 is a psychological level, and institutions know that. All right, institutions, whilst the first rally was going on for Cardano, I can guarantee you that they were not buying. All right, what they were doing is rather allowing for retail traders to get ahead. And once you guys go ahead and buy, everybody on the internet is talking about Cardano's going to hit $3 or break $3, hit $3. Once there, this is a very good example of what I said 2 days ago. When retail traders are all going in one direction, institutions are going in the other way. Look at Cardano. It managed to get past $3 to about $3.09. But after that, the price came tumbling down. Now, as the price is tumbling down, the price, where did the price get to? The first place it's gone to is the demand zone that originated this whole movement. So this whole movement, which if we do the time for this, I want you guys to see how the market works on crypto. From the 18th of August, all the way up until the 2nd of September is about almost 20 days worth of trading. And in just one day, all of you that were foaming in to buy, the prices crashed all the way back down to the beginning of the move. This is when you should have been buying. And this is what I told you guys to do. And this is, I'm glad that you see this for yourselves to understand exactly what's going on. When it comes to trading, guys, and technicals never lie. I told you that the price was going to get around here already before any of the news came out or any of the crash came out, because the order books, if the order books can't sustain the move, the price will come tumbling down. That's just a fact of life. So really, if you want to be the best investor, if you understand how to capture these movements, life will be a lot better for you. Okay. So now that the price has done this, it's already spiked back up to $22.5, but I don't believe this is done. We still need the price to get to $1.90 because there's market inefficiency there. And there's also market inefficiency at $1.45. So keep your eyes peeled, guys. Please keep your eyes peeled. What we've had right now, this buyback that we're seeing, is the mixture of institutions and people with very smart robots that buy the dips. So that new money or that extra money coming into the market is pushing the price up. But if that liquidity can't sustain the movement, the price is going to drop even further. So this was a very simple lesson for you guys to see today. If you have any questions, please drop them in the comments below. And I'll be back again, possibly with another video today or in the evening. But I love you guys and take care.